Senator Sherrod Brown is going to take down Bitcoin. Let me explain. As you may know, Bitcoin has been gaining a lot of traction and attention lately, and this has caused a lot of confusion and speculation among investors. The US government has been keeping an eye on these digital tokens and has been considering how to regulate them. So, what is the US government's plan for taking down Bitcoin? Well, it all depends on how the government views Bitcoin. If the US government views Bitcoin as a threat to the current financial system, then they may take steps to regulate or even ban them. For example, the US government could impose taxes on Bitcoin and limit the amount of money people can invest in them. They could also require that exchanges obtain licenses and follow certain regulations. This would make it difficult for people to use Bitcoin and would discourage some investors from using them. Another way the US government could take down Bitcoin is by using the existing legal framework to prosecute those who engage in illegal activities using digital tokens. The US government has already started to do this by prosecuting those who have committed fraud or money laundering using Bitcoin. This type of enforcement could help to reduce the amount of illegal activity associated with digital tokens and could discourage people from investing in them. The US government could also use its existing laws to prosecute those who use digital tokens to finance terrorism or other criminal activities. This could help to reduce the amount of money used to fund these activities and would also help to deter people from investing in Bitcoin. This could be done by setting limits on the amount of money people can invest in a single digital token or by setting limits on the amount of money people can invest into a single exchange. Finally, the US government could use its existing regulatory framework to limit the amount of time people can hold digital tokens. This would help to discourage people from holding digital tokens for long periods of time and could help to reduce the amount of money people can make from investing in Bitcoin. The first existing framework that can be used to limit the amount of time people can hold digital tokens is the Securities and Exchange Commission, SEC. In particular, the SEC has issued guidance on digital tokens, in which it has classified certain tokens as securities. The SEC has also established rules for the registration, reporting, and disclosure of digital tokens that are classified as securities. These rules require that certain digital tokens be registered with the SEC, and that the issuers of these tokens must provide ongoing disclosure to the SEC and to investors. Additionally, the rules impose a time limit on the holding of digital tokens, which is intended to protect investors from holding tokens for too long and facing potential losses. For example, the SEC's rules require that securities tokens must be held for at least 1 year before they can be sold or traded. The second existing framework that can be used to limit the amount of time people can hold digital tokens is the Commodity Futures Trading Commission, CFTC. The CFTC is a federal agency that is responsible for regulating the futures and derivatives markets. In particular, the CFTC has issued guidance on digital tokens, in which it has classified certain tokens as commodities. The CFTC has also established rules for the trading of digital tokens that are classified as commodities. These rules require that certain digital tokens be traded on CFTC-regulated exchanges, and that the exchanges must provide ongoing disclosure to the CFTC and to investors. Additionally, the rules impose a time limit on the holding of digital tokens, which is intended to protect investors from holding tokens for too long and facing potential losses. For example, the CFTC's rules require that commodities tokens must be held for at least 1 month before they can be sold or traded. The third existing framework that can be used to limit the amount of time people can hold digital tokens is the Financial Crimes Enforcement Network, FinCEN. FinCEN is a federal agency that is responsible for combating money laundering, terrorist financing, and other financial crimes. In particular, FinCEN has issued guidance on digital tokens, in which it has classified certain tokens as convertible virtual currency. FinCEN has also established rules for the reporting of transactions involving digital tokens that are classified as convertible virtual currency. These rules require that certain digital tokens be reported to FinCEN, and that the issuers of these tokens must provide ongoing disclosure to FinCEN and to investors. Additionally, the rules impose a time limit on the holding of digital tokens, which is intended to protect investors from holding tokens for too long and facing potential losses. For example, FinCEN's rules require that convertible virtual currency tokens must be held for at least 1 year before they can be sold or traded. Overall, the US can use existing frameworks, such as the SEC, CFTC, and FinCEN, to limit the amount of time people can hold digital tokens. These frameworks impose time limits on the holding of digital tokens, which are intended to protect investors from holding tokens for too long and facing potential losses. Furthermore, these frameworks also require the issuers of digital tokens to provide ongoing disclosure to the respective agencies and new investors. Through the use of these existing frameworks, the US can ensure that users of digital tokens are adequately protected and that the digital token market is properly regulated. Overall, the US government could take a variety of steps to take down Bitcoin. They could use the existing legal framework to prosecute those who engage in illegal activities using digital tokens and could also use their existing regulations to limit the amount of money people can invest in Bitcoin. These steps could help to reduce the amount of money available to fund illegal activities and could also help to discourage people from investing in digital tokens. Another possible action the US government could take is to create its own cryptocurrency. This would be a government-backed digital token that would be used as a form of currency. The US government could use this to create a more stable financial system and could also use it to regulate Bitcoin. Finally, the US government could try to shut down exchanges where people can buy and sell Bitcoin. This would make it difficult for people to get their hands on Bitcoin and would discourage them from investing in it. In conclusion, the US government could take a variety of steps to take down Bitcoin. It is unclear how they will approach this issue, but it is important to keep an eye on how the government is responding to Bitcoin. With that being said, I want to thank you for watching. Now watch how the Rothschild really made their money.